Hi everyone, welcome to today's video. So on today's video, I'm going to discuss with you three specific sectors or industries that I'm very bullish about, and I'm going to continue to make more investments in these three sectors. There have been some very important macroeconomic developments across each of these three sectors, which I will consolidate and I will present it to you on this video. So please watch the video till the very end. Only then you will understand all the specific points. Super relevant video for you if you're looking to buy more stocks, or if you are just new to the stock market, you are trying to decide which sector should I go versus not, then this video is going to be very important for you. Also, a big shout out to our sponsors for this video, which is Ditto Insurance. I absolutely love their product. I and my family personally use it. I have purchased my own insurance from Ditto. The thing I like the most about Ditto is that you can go and speak with an insurance expert for free. Absolutely free. So do check the link in the description box and you can use the link to schedule a free phone call with people from Ditto. Alright, so let me jump right into the video. So the first sector that I am quite bullish about is, interestingly, the insurance sector. And there is a very specific reason behind it. So here is the reason that in 2020, unfortunately, a lot of people lost their lives, a lot of families were impacted, and all of us saw the carnage that the COVID-19 created. Now, as a result, what has happened is that the entire insurance industry, or all the companies in the insurance sector, especially term insurance or life insurance companies, they have taken a lot of brunt because of the sudden spike in the number of claims that they had to pay out. Despite growing their sales, such a tectonic event has literally damaged the insurance industry a lot. Now, what has that resulted in is the simple fact that these term insurance companies are going to increase their premiums by 40%, 40%. Now, very important point for you to absorb that if you miss buying term insurance now, and if you decide to do it after 2, 3, 4 months, the premiums that you would have to pay would be 40% higher. So please go and buy your term insurance now. You can speak more about this particular topic with the health insurance from Ditto for absolutely free. So go schedule the call. Very important. You absolutely need both health insurance and term insurance. Please learn more about the topic. I have done more videos on this topic. Please go and watch it. Now, why am I bullish about the insurance company in 2022? Let me explain that by taking you through the example of ICICI Prudential. Now, if you take a look at the quarterly results, you will see that in 2018, the total sales were 8,670 crores and they constantly went up. So it was not as if that there was something bad. So the sales in 2018 were standing at 8,670 crores, which has grown to almost 23,161 crores in the September quarter. Excellent results, such a massive growth. But here is the interesting point, right? Look at the operating profit. Despite having achieved such massive growth in sales, the operating profits have been negative for the last 2 years. Why? The reason again is very simple, that they had to settle so many claims due to the COVID situation. What has happened is their profit margins went down dramatically, and this got reflected in the stock price also. So you can clearly see that during the COVID pandemic, these stocks were struggling, right? During the entire 2020 period, these stocks were struggling. Now they have started to come back up. Now what is going to happen is fairly simple, that these companies are going to increase their premiums. This will get reflected in what? This will get reflected in revenues, right? And the profits will become positive. The profits will become positive, and as a result, the share price will become a rocket, right? So that is the reason why I have both HDFC Life Insurance and ICICI Prudential in my portfolio. I'm still buying my health insurance with Ditto, but the stocks that I'm investing in are ICICI Prudential and HDFC Life. Now, will I invest in LIC? That's a separate discussion altogether. So let me know in the comment box if you would want me to do that video. I will shoot a separate video on that. So essentially, just to cut the long story short, this is a temporary aberration that happened in 2020, that despite these big companies growing their sales, they have been operationally struggling. Why? Because they had to settle a lot more claims. Now they are increasing their prices. This will get reflected into the balance sheet and things will become positive again for these companies, and it will again spike up the share prices in the next 2 quarters. That is my hope. Now the second sector that I'm very bullish about is the next gen tech. So let me help you understand what do I mean by next gen tech. Now essentially, if you subdivide the technology sector, tech sector, it can be bifurcated into multiple domains. For example, you have companies like TCS, right? You have companies like Infosys, you have companies like Wipro. These are service-oriented tech players, right? On the other hand, if you have companies like Coinbase, Alibaba, Google, Meta, that is Facebook, these are the companies that are defining the next generation of technology that we are going to use. Whether it is artificial intelligence, whether it is machine learning, whether it is robotics, whether it is cryptocurrency / blockchain, all these companies are working of some variant of it. Here is a very interesting article from Wikipedia for you. Do you know that Mark Zuckerberg is trying to launch a currency called as Libra and he is making good progress on it? Let me know in the comment box if you want me to do a video of comparison between Mark Zuckerberg and Vitalik Buterin, who is the co-founder of Ethereum. So there is a good fight going on there. Now, why am I so bullish about the next gen tech? And I genuinely see majority of my investments in 2022 going to next gen tech stocks. Now, unfortunately, majority of these companies are based outside India. So majority of my US stock investments is going to be aligned to next gen tech. I keep on making videos. Let me know if you want me to make a video on Alibaba. If there is enough interest, I'll make a video on that because I feel there is excellent buying opportunity in Alibaba. I have already purchased that stock and I'm happy to shoot a video and explain you the logic behind it. Alright, so why the next gen tech? Now here is a very interesting clip from Kathy Woods. Now Kathy Woods run an investment company called as ARK Investments and she is one of the foremost tech investors. So we need to understand her viewpoint.
Logically enabled innovation. We are in a period today like we have never been, never. I mean, you have to go back to telephone, electricity, and automobile to see three major technologically enabled sources of innovation evolving at the same time. Today, we have five platforms, DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology, all of which are deflationary, and not just by a little bit either. Jeff Gundlach and Howard Marks, and I think Stan Druckenmiller and Ray Dalio, all of them, I think, have been very, very concerned about a deflationary bust.
All right, so on this video, Kathy would explain that, hey, you know what, the world is going to move towards a deflationary phase. So what do we mean by that? So let me help you demystify that. Now, first and foremost, I would want you to understand this chart. Now, this shows the percentage of wealth that is being aggregated by the top 1%. This has been constantly going up. And you yourself try to understand this fact that in 2020, when COVID pandemic hit, markets went up. How much do you think people who were at the bottom 10% of the pyramid, how much money did they make from the pandemic? Zero. They were in a very bad shape. All the money that was made during the 2020 pandemic and even now, it has happened because of what? It has happened because of something called as asset price inflation, right? So what is asset price inflation? Asset price inflation means that, for example, prices of Bitcoin went up, prices of houses went up, prices of stocks went up. Now, do you think that people at the bottom 10, 20, 30% of the economic levels, do they own any of these assets? The answer is absolutely no. They do not own any of these assets. They do not invest in stock markets and bunch of different assets. They keep their money in what? They keep their money in cash, that people live hand to mouth, that they will go work, collect a little bit of money and eat food with it. Next day again, the cycle repeats. So this asset price inflation is happening right now because the governments are printing so much money and they are dropping down the interest rate. So this is the first part of the story. Now, if you understand the fundamental reason behind why this is happening, that is more important. Why is this happening? Because rich people, what they do is that they use tech. For example, what are some of the trends that have picked up from 2018 onwards? These would be trends like cryptocurrencies, blockchain. Many of you might hate cryptocurrencies, but these are trends that have picked up, right? We can't deny it. Now, if you take a look at top 10 companies on the US stock exchange, 7 of them have to do with internet, software, technology. So the bottom line is that technology is going to keep on ramping up and rich people know how to leverage technology to make more money. With things like RPA, robotic process automation, chatbots and bunch of different things, what is going to happen is that this wealth distribution between rich and poor, it is going to get further skewed. Rich are going to continue to become richer and richer and richer. Now, this is a phenomena that I can't change as an individual. I can only understand the trend and I can take my investment bets accordingly. That is the only power that I have as a retail investor. I feel very sad by understanding this situation. But what is this going to do? This is going to lead to deflation. Why? Because it's like this, right? That this is the total wealth and almost 90% of the people have only this much wealth, rest and have this. So we will move towards a world where people have fewer jobs because it's going to be robots, right? They are going to capture majority of the jobs. Rich are going to make more money from the robots. So the growth will slow down and that will lead to a deflationary pressure. Now, there was another interesting point that the US economy is going to grow from 28 trillion to 40 trillion dollars, right, by 2035, right? So this was one of the points that she mentioned on that interview, where this additional 12 trillion dollars will come from. It will come from this high-end tech or next-gen tech. So therefore, as a world citizen, I feel very bad who are at the bottom strata of the society. I feel really, really bad. I genuinely do. But as an investor, what should I be doing? Sensible thing, right? That, okay, this is where the world is going. And this is where, if I have to make investment bets, I'm going to invest here. That is the reason why I'm investing in high-end / next-gen tech. Now, the third sector where I'm quite bullish about is the AMC, Asset Management Company space. I've made separate videos on this, but there are some recent interesting trends that are happening in the AMC space. So if you're looking to invest your money in something like HDFC AMC or NAM India, you must listen to this part of the video very, very closely. Okay, so first and foremost, let me tell you how asset management companies like HDFC AMC, they make money, right? It's fairly simple, right? What you do is that you do a SIP, right, of 15,000 every month, right? Then there is person B, your person A. Then there is person B, he or she does 10,000 SIP. Then person C does like 5,000 SIP. Now, where does all this money go? This money goes into some kind of a mutual fund, usually speaking. Now, this could be an equity mutual fund, hybrid mutual fund, debt mutual fund, bunch of different funds. So, what is this called as? This is called as AUM, Asset Under Management. And AMC companies like HDFC AMC, they charge a commission on it, right? That is how they make money. For example, if the total portfolio size is like 100 crores, and HDFC AMC charges on an average 1% commission, then the revenues for HDFC AMC will become 1 crore. So I hope you understood the business model. There are two parts to this. One is price and one is quantity. So price means how much commissions they are charging. Are they charging 1%, 2%, 3% commission, or are they able to increase this number, right? If both the things are happening, that they are able to charge higher commissions also, they are able to increase the number of people doing their SIPs and getting more and more money from them, their revenues will keep on going up. This is going to happen. So you need to understand this powerful equation. Now, there are a few key things that are happening in the AMC space. Number one, the penetration of AMC industry is going to increase. Why? Because we are sitting at a point where only 2%, 3% Indians invest. On an average, if this number grows to 6%, then the entire industry size will triple. That is a very simple math concept that we need to understand. Another related point here is that the majority of the wealth that Indians have, this was as per one of the RBI's report, almost 90% of India's wealth is stuck in real estate or gold. Now, new generation like you and me, or people who are finding recent jobs who do SIPs, are they equally excited about real estate investments or gold investments? No, right? This trend is going down. So where is the money going? The money is going to AMC companies. So therefore, the industry is growing. This is the first key thing that we need to understand, and this has been exhibited over the last 3-4 years also. Now, another trend that many of you tell me is that, hey Akshat, you know what? Competition is going up. So many new players are coming. So many fintech companies, for example, Paytm and a bunch of different fintech companies are also coming into this AMC space. Then what, right? Is the market share going to stay the same for existing players like HDFC AMC? No, absolutely not. The market share will come down, and it's already started to come down. But we must understand the fact that the industry is currently in an expansion mode. It is a highly lucrative industry. The industry itself will go through a PE expansion. It's only a matter of time. Now, due to this increased competition, what has happened is that the profit margins of these AMC companies has come down. Now, yesterday night, I sat and read the entire M&A discussion that took place. I read like a 500-page report. Please give it a thumbs up. I study more than IIT JEE students to make these videos. Okay, so back to the topic. So, the competition has gone up in the industry very recently. Therefore, companies like HDFC, AMC are facing stiff competition in the price times Q equation. This price is also going down, right? The commissions that companies like HDFC, AMC are charging, that is going down. Why? You have something called as hybrid funds, which is a mix of equity and bonds. Now, they charge the highest commission. People are becoming smarter and smarter not to invest in such funds. I have made a lot of videos on hybrid funds, and probably some of them are also acting on this advice. So, this hybrid funds used to charge a lot of commissions. The total AUM for hybrid funds has started to go down, right? That is one key trend that is happening. The competition is picking up. So bottom line, what is happening is that this entire P, the commissions part for AMC company has come down, right? That is happening already. Another key trend that is happening is that the NFO or new products, right? These are new fund offering. These are new products. New NFOs are going to be launched very soon, but for the last 1.5, 2 years, because there was COVID, not too many NFOs came out. Now it's like Nestle launching a new product. Now if it launches a new chocolate, then most people go and try that chocolate out, right? At least people who are Nestle fans. Same goes with mutual funds, that these days there is a lot of appetite for investing globally. And all these funds, including HDFC AMC, I was reading their management discussion and they categorically said that, you know what, we understand that the consumer preferences are changing. We are going to do NFOs on investing in global opportunities also. So Indians want to invest money outside India. These NFOs are going to get launched. Again, if you want me to make a video on this, are these good, are these bad? Let me know in the comment box. I will do a separate video on that. But bottom line is that after the 2020 COVID pandemic, these AMC industry is going in a full swing in terms of launching these new NFOs, which will bring more AUM, asset under management. The commissions will continue to stay low. That will become competitive with time. But the quantity increase will hopefully offset for the fall in commissions. Now, this is a paragraph that I will put out from the management discussion and analysis as to why companies like HDFC AMC will still continue to thrive. And the reason here, if I have to just quickly summarize, is this, that companies like HDFC AMC already have a very strong distribution network in a growing industry. Yes, their total market share will come down from 12% to maybe like 8%, but the industry itself is growing by 18, 20, 25% a year. Then it's a healthy market share in a growing industry. And that is the reason why I'm bullish on stocks like HDFC AMC and NAM India, because they are still quite big. And I will continue to aggregate more positions in newer AMCs, because this is still a very good sunrise industry with very high profit margins in place. So just to recap the entire video, number one, please go and buy your term insurance, because the premiums are rising. This will get reflected in the stock price. So if you want to invest in insurance stocks, you should do your own due diligence. I'm quite bullish about it. Number two, I'm very, very bullish on new age tech. And third and finally, I'm very bullish on AMC industries. And these are the three sectors that I feel will do quite well in 2022. I hope you enjoyed the video. I will see you the next time. Please press the like button and share it with your friends.